if you are a, let's say, like you said, being dogmatic or being very close-minded, and you're just a fixed rate borrower come hell or high water, well, you're talking about the 10-year treasury being 4.2 today, let's say. 4.2, just to be rough with it, call it a 1.8% lender spread. You're talking about borrowing a 6% rate today. So if you're trying to buy top product, okay, fine. If you're buying like really good real estate in Dallas and lower leverage, you could probably get a 5.5% rate instead of 6. Okay, fine, 5.5%. But if you're buying a 4.25 cap and financing it at 5.5, that's super negative leverage. And frankly, a lot of people aren't signing up for that right now. So what does that tell you? Because deals are still getting done. So what it tells you is that the people that are buying today are floating because they believe that, couple things. They're willing to pay a low cap today because they believe in growth in the future. And they believe that fixed rates today are oversold and they're not the real legit rates that are here to stay. And they think if they float, they can actually outperform what is today or like a short term kind of pop in long term fixed rates. So that, I think you're just seeing it in the data and seeing what I don't necessarily want to call it the smart money, because just because someone's buying a deal right now doesn't make them smart. But the people that are active in the market right now are making an explicit bet of basically saying, yeah, I think that rents are going to grow above consensus or above, long-term trend. And then also short rates are going to float down.
What does this mean for our strategy as we go forward in 2025?
Great question. For Lone Star Capital, like we said, we have a bias towards fixed rates, and the majority of our portfolio is fixed rate. So all this volatility that's been happening all year hasn't affected our deals whatsoever because we have a fixed interest rate on the majority of our deals. So every month we know what our interest rate is and we're able to have positive cash flow after paying that debt service, right? We have a few deals that are floating. So those deals will benefit as the Fed continues to cut rates. And then as far as acquisitions, we'll be just looking at a case by case basis because that's just how volatile treasuries are.